Volatility is back in the US Treasury market, particularly in the mid to long end of the curve. The 10-year yield hit the highest in 7 years, with the pace of gains spooking global equity markets. Last week saw the worst week for the Nasdaq since March, with home builders stocks taking a hit in the United States. In terms of how to trade this, investors were very focused on the bull flattener trade, taking the view that the US Treasury curve was poised for further flattening, selling the front end and buying the long end. However, now the bear steepener is coming back into play, with a sell-off in long-dated treasuries increasing the curve slope once again. So why have bonds been selling off? Well, the long end of the curve looks like it's playing catch-up with a strong economic backdrop. We saw the ISM non-manufacturing PMI come in at the strongest reading on record. ADP topped estimates, and non-farm payrolls were all in all pretty strong, despite a miss on the headline figure. And on the trade war front, the US-Canada deal has helped to alleviate some of the market's concerns about the potential impact on global growth. Meanwhile, on the supply side, there's been increased issuance in the Treasury market, driven by Trump's expansional fiscalism, with tax cuts and increased spending. And on the demand side, a strong dollar has dampened foreign demand for US Treasuries since they've become more expensive. So will the sell-off in US bonds continue? Well, maybe not, if the IMF is correct on its gloomy prognosis on the outlook for global growth. Plus, higher yields might allure investors to rotate away from equities and back into bonds. Given the yield differentials between the US and, say, Germany or Japan, the US certainly looks more attractive. And if the equity sell-off continues, there could be a flight to safety amid risk-off sentiment, spurring demand for safe havens like the US Treasury. But with the Fed hiking rates and inflation starting to come back, some think there still could be further pressure on the bond market. Whether that means the end of the 30-year bull market for bonds is another matter. I'm Victoria Scholar. Thanks for watching IGTV, and we'll see you very soon.